Or are people still waiting? Yes, just so people did already start trading. Started already. Yeah, usually I also start like the second week, so it's gonna be the first week for me. I usually let the first week slide, and then the second week I start. So good to hear. So everyone's back, got their engines running again, so to say, so to speak. And how did you guys? What kind of start did you guys have? Any good trades or a little bit of a slow start so far? First is rebalancing the December rally or valley. Decent yet size smaller. Slow start. What happens? Steady start. That's good to hear. So yeah, today I kind of want to do a little bit of a market analysis just to see where we stand in the market. I thought it might be a nice idea. Um, so yeah, I'm also curious to see what kind of assets do you guys like to see today. We can go over a couple markets to just check it out and see what opportunities may lie ahead this year. First interesting thing that I kind of want to look at is just the U.S. markets, of course, U.S. indices, because I think a lot of people in here probably trade U.S. markets, right? And at this point, for me, the most interesting thing is the fact that the U.S. indices are not really trading in sync, right? Nasdaq is usually a pretty strong and volatile pair, but it's kind of lacking behind if we compare it to um, the other two indices, right? Because it's kind of still stuck in this range. The way I'd like to basically highlight a range or see where we're at is by using these quarter levels, or I basically divide a range in four pieces, four equal quarters, and that way you can kind of gauge the premium and discount and see where we're heading, right? And a big thing usually is that this last level we kind of want to see once we get in there, we kind of want to see the market speed up, right? And just take this last part out and in this case reach for all-time highs. But um, as far as NQ goes, it's not really showing us any speed whatsoever, right? Um, However, if we do the same or look at ES, this one's already trading above it and is progressing way much faster, or much faster. And the same goes for YM. YM didn't even have the big pullback below the October lows. It stayed above it, so we got SMT divergence there, and then it just moved up into the moon basically. While NQ traders are still having to deal with this. Now, my big note is, yes, this would kind of qualify as SMT divergence in that case, right? Where we have basically NQ creating a lower high while the other two are creating a higher high. But for me, I'd say SMT divergence is pretty context dependent. And what I mean with that is the fact that when there's still pretty bullish order flow, I usually don't really look at all the SMT divergence that's against us, right? So in this case, if it's not really supporting order flow, I don't really take it into consideration that much. I might look at it, but I'm not gonna hold my hand and say we're gonna be bearish because it's just that SMT divergence, right? Because it's just a confirmation at the end of the day, um, and not a prediction or bias tool. So, in my opinion, and for what I'm looking at, is just for NQ to continue moving higher. Honestly, it might be the six sister, right? Might just be the asset that's just lagging behind, and it will catch up eventually. Um, we've seen this countless of times with either ES or NQ or OYM, where one of them is lagging behind, or two of them, and one is like a clear strength leader. Um, in this case, YM clearly is a strength leader because it's just progressing higher, much faster compared to NQ, right? If you look at the the up close days, they are much smaller on NQ compared to YM. These are much larger up range days, and same goes for the down close days. These are much smaller compared to the down close days we have on NQ, right? So it does invite some different perspective on, like, let's say you're someone that swing trades, right? Or you like to use relative strength a lot, right? If you use relative strength, then YM might be the best for longs, for example, and NQ might be the best for shorting opportunities on the low, like the short term, right? If narrative supports it. So yeah, personally, I just want to see NQ continue upwards, and we'll get to all-time highs pretty soon, I'd say, right? Let's see. I see GC gold. Now this is an interesting chart because I do know gold is oh, there we go. We'll remove the drawings. Is back at all-time highs again, right? Same thing here. It has been lagging a little bit. Yeah, strong buy. While silver is going even crazier, right? So gold, but it's also because of like the geopolitical situation at this point. Um, because there's like tensions in the Middle East, so gold will go up because of it. Because of course it's used as a safe haven, so gold indeed strong buy, just even off of fundamentals alone. So pretty interesting to see. Um, Also nice this little IFG setup that we're getting right here, right? Interesting. Let's see. Do we have anyone from the States in here? Because I woke up this morning at like 5 a.m. Yeah, I can look at PL. I woke up this morning at like 5 a.m. and that's like a few hours after the news hit that Powell was getting like I don't know what's happening. What was happening with him? Um, he's getting sued, something like that. And yeah, you have to wake up early for the trading day if you want to be up by New York AM. That's crazy early. That's like 6 a.m. for you, right? When or 6:30 when 9:30 hits in New York. Yeah, so we'll get Paul getting sued. I woke up at like 5 a.m. New European time, right? So that's like 11 p.m. New York time. And it was only like a few hours after the news broke, so I woke up to it and I was like, "Wait a minute. We're not even getting like a calm start to the week. We have to get into this on like Monday morning, deep into the night, or Sunday evening for you guys." Which was kind of funny. Um, yeah, I also told a friend like we can never just have like 1 week of peace in these markets, right? It's just it's drama all over every single week. It looks like, at least it has been for like the past few months, right? Um, I mean, we closed off last year with like the whole government shutdown and stuff, right? Which was really annoying for like a few months. And then we had like the Colombia stuff. So we're not getting off the hook here. And indeed, it's 2026 volatility. Here we go. Well, at least we do have volatility. I prefer indeed markets that are volatile compared to markets that just go sideways. That would be pretty boring. PL, which is palladium, right? Am I correct? Yeah. Oh no, platinum. My bad. Interesting. A 1 day chart. Let's go to a 4 hour chart because platinum is a little bit stuck inside this range, it seems. What do we have? But it is trending upwards, though. It is trending upwards, and I have to say that. So for me, like structurally, there's nothing wrong yet. It broke a 17-year high, and I caught that in December. Oh, let me just do 1 week. Then we'll be able to see that high. There we go. Oh, this is that high you're talking about, probably. Yeah, right there. So yeah, if you look at a weekly chart, there's really nothing too concerning about platinum not continuing, I'd say. We just traded into this gap and then we trade out of it, and then usually you kind of want to see a follow through on this candle, right? That's kind of what you want to see ideally, but we don't always get what we want and we don't always get the ideal situation, so we just have to live with it sometimes. um However, we can see that we're trading into this inefficiency right there with the order block. I'll just copy this over here so we can have a better look at it, and we'll go back to the 4 hour. And then suddenly it becomes a whole lot clearer, right? We trade into this down close candle, and we always want to see down close candles support up close candles or support the market into going up. Um, oh yeah, it's rebalancing at this moment. I think you referring to this one, maybe. Pretty clear balance right there. Which we could see if platinum gets some strength, we could see it indeed find support in this gap right there, and then to find and see if we can take over the 75 level again and finally break through, and then we'll maybe see a new all-time high again. Also, something very nice to note is this gap right here where we basically closed up and then opened up higher, right? So it's like a type of inefficiency that we also have to look at. That would indeed be nice. But you caught that in December, it breaking the 17-year high. That's pretty nice. Was it like a swing trade, or was it just like intraday that you were able to catch it? Intraday on the trend days. Oh, that's pretty nice. Then you were able to ride like the trend upwards and just catch longs during the week. That's pretty nice. I love when markets are really trending like that because it makes the bias and stuff so easy. It's basically just buy until you can't no more on these type of days. If you have like your stop and everything and like your max pain set out, those days they can treat you really well. Of course, it's not gonna be up close days every single day, but most of the days are gonna be that like that. Yeah, it's beautiful when it's beautiful for sure, for sure. So I take it you trade futures. Yes, okay. That's nice. Yeah, most futures traders in here, they probably trade intraday, I think. I'm not in London, but close to London, though. Well, close. The Netherlands. So it's like across the sea. Across like the North Sea. So, um, let's see. I'm curious, where is everyone in here from? I know you're from Cali. I know there's other people from Asia because someone said they're GMT +7. Ah, Daniel's from London, though. Nice. From Australia. You live in Cali. Okay, okay. Florida. Toronto. Nice. Also London. That's nice. Do I think NQ is going to keep buying? Well, let me just phrase it like this. For me, there's at this point no reason why NQ should just suddenly break down and go lower, right? Um, Fundamentally, everything is still fine. There's nothing going wrong with the economy or going wrong with like any data point which would suggest the Fed halting its cutting cycle. So for now, I think we should be fine. Yeah, I mean tech is wobbly, so that's why it's like lagging behind compared to the other two. Um, so yeah, I mean it could just continue to go up, but most likely it's going to be very slow, a very slow grind higher. Um, so more like this. I mean, like if we start here, yeah, we're going up and it's like 4% up, but is it pretty? No, right? So that makes it like way harder to guess or estimate when um we could see all-time highs, because for all we know, a YM and the ES, they just go up day after day, while this thing might stay below all-time highs for the coming month, for example. Could happen. We don't know. um of course, important things to look out for are important news releases. We have FOMC coming up. NFP and CPI data releases are going to be very important to drive some volatility into the market. So I'd say just keep an eye out for those, because those will also often help you guess, or not guess, but understand if continuation is likely or not, right? Yeah, CPI tomorrow, because those all basically influence the rate decision for the Feds. Um, And that's going to be very important for NQ because it's going to basically tell big companies and institutions and banks and whatnot if they should put their money on stocks or not, right? Um, but yeah, now we also have the whole situation with Powell, so I'm curious to see how that will unfold. Because like I'm not too familiar with like, well, I am familiar with American politics and stuff, but like from what I know, I don't know if this stuff has ever happened before, where the president's like basically on the ass of like the president of the Fed. So yeah, because some people say it's because the Fed isn't lowering their rates any faster than the president wants to, so he's like basically getting on their ass. Others say it's because of like the whole um what was it, building construction thing where they paid like used like 2.5 billion dollars to renovate like buildings for the Fed or something, and Powell has like a testimony for that. Yeah, the good old wild Trump wild card. Yeah, you could put it like that for sure. We already had the big one last April with the whole tariff situation. That was a big wild card, as you can see, in March and April. So yeah, maybe we get another Trump wild card this year, and NQ starts to go crazy because of that. We never know. That's the thing with a very unpredictable government. Sometimes stuff can just suddenly happen. So it's always good to have like scenarios sketched out in your head. If I don't know, a government will do something that is positive for markets, you can adjust your bias. If a government does something that's very negative for markets, such as tariffs, we're just in for a long ride down or long ride up. Um, but so far, I would say NQ is not very volatile. If you compare it to like the previous year's range, where we went from April to August, we went up 9,000 points, and now we're stuck in a 2,500 point range, right? So it's not that big of a range. Um, so it's just honestly a matter of time before we break out of it, I think. And in the meantime, let's also check out what the currency markets are up to, right? Those are also pretty important. So we can still see that NQ, or I'm sorry, the DXY is still stuck inside this range. It has been for quite a while after we saw a big write down since January. Well, at the same time, probably the euro is going to go, yeah, it's going to go down again. So still stuck in that same range as well. Euro did see a very large expansion last year. So it gained like what, 16 cents almost? Yeah, 16 cents on the dollar. So that's pretty good for the euro. Um, so no parity. A lot of people thought we were going to hit parity last year. Well, we were only 2.5 cents off it, so, or 2.2. So wouldn't have been crazy, honestly. But now, honestly, I'm not very interested in these markets at this point because they're like very uncertain, and you can see it in like how they're moving sideways. They're not really choosing a direction. Um, so personally, when trading forex, I'm looking at slightly more exotic pairs in that case. Still majors like AUD USD, for example, or anything for that matter, any other cross, because they are moving a little bit more compared to the euro versus the dollar. I think same goes for GBP. I think it's moving a little bit more. No, it isn't. It's also barely doing anything. Yeah, ranging markets. Like for me, ranging markets aren't really my strong suit, especially because I do a lot of swing trading. So honestly, it's just sit back for me. Just wait until until I have some more info or some more confirmation, or when I know for sure that the market's gonna move. Right. Otherwise, I'm just gonna be. The problem with it is these ranging markets, especially when you're like swing trading. Let's say you take a, I don't know, a long from, let's say, the 4th of November, right? And you hold it all the way until here. You're in the trade for 50 days or 36 trading days. You're going to be paying negative swap on 36 days with like I don't know how many Wednesdays where it's triple swap. So it's gonna eat up all your profits that you're holding, right? Because the US has a larger or higher interest rate than the euro, so you have to pay the difference on your trade every single day, every single night, let's say. It will get deducted from your trading profits. So if markets are very slow and it's taking a long time to basically hit your TP, you're gonna lose a lot of the profits. Let's say indeed you're still in this trade, right? And you want to hit it, exit at the range high. You would have been in a trade for 59 days. And 59 days is going to be a lot of swap or a lot of interest that you're paying on the trade. So for me, it's not worth it. Um, so that's why I'm just waiting. When there's a trending environment, I know I can, capitalize off it a little bit better compared to these ranging markets because it's just a big cost opportunity. Yeah, too much, too expensive otherwise. But yeah, usually I just let trades run and just do their thing until it's no longer valid. But in these type of circumstances, I'd rather just sit back, relax, and wait. Let's see, what are other markets that we could look at? Um, let's see. We'll open up the watch list, see if there's anything in there. Anything interesting. We'll look at oil. Gotta love how, gotta love oil. The way this has been grinding down so slowly, it's crazy. It's almost looks untradeable as well. Basically swing trading. Yeah, exactly. And the same principle goes for NQ, right? Let's say you're a swing trader and you want to be you're bullish on I don't know, US indices, right? You're better off not picking NQ at this point because it's just weak compared to the other two indices, right? If you're going to be holding a trade, let's say here, for example, you would have been in the trade for 14 trading days, right? But since you're selling the dollar to buy NQ, you're on CFDs, that is, not on futures. You're paying interest because you're basically shorting the USD compared to the Nasdaq, right? So you're going to be paying swap again. So even though all the while on YM you would have hit your take profit probably already, right? And yeah, that's a great learning opportunity. At least for me, it was because I was in on Nasdaq on this low formation right here. I skilled in on this position right here, and then it just kept ranging around. And I honestly just closed the trade somewhere inside here for a little bit of profit on some of the positions because I was just not, I don't find it worth it to just keep on holding on and hoping, especially because the other two, they took out the range high at the moment that NQ basically went down. So for me, it's then, it's not worth it to try and hold on. I'd rather accept the fact that I made a bad choice. No trading on hope. No, exactly. The thing is with swing trading, I don't really mind. For me, it's like once I take a position, I don't really care about the position anymore. As in, it's becoming way easier to just let it go and just not look at it too much. Like I can look at it a few times a week and it's fine. I don't experience like anxiety and that kind of stuff from it. Much less than from intraday trading, for example. That triggers me a lot more. Um, but yeah, at the same time, waiting for so long and then seeing all your profits slowly disappear because swap is eating it, you're just gonna be like, okay, there's gotta be a point where you just um, pull the trigger and just cut off the trade eventually, and just accept the fact that you made a bad choice and that relative strength does play a role. Um, and it would have been a better opportunity to trade the other markets, but that's could have, would have, should have, and we have no room for that. So yeah. Oh, I also want to say for anyone that's got the Elite Collection in here, and I know there's a few people that do, make sure to check out the WAP library because we recently released the um, latest intermarket report, and this time it's a 2025 edition, right? So we're basically looking back at the entire year. So if you have access to the Elite Collection, go to WOP and go to the library. There's a lot of resources in there that you can look at, um, as well as indeed the new uh, intermarket report. Let's see. Yeah, they're kind of trade offs. Yeah, in a way. Um, like I transitioned to swing trading somewhere at the beginning, or I think Q1 or Q2 last year. Um, because for me it's like more manageable with like other responsibilities. Uh, because I do stuff outside of trading too. It's sometimes hard to basically get in a time every day to be like I have to be present every day for my edge to work out. Um, it was not doable anymore, so I was like, okay, I have to find a solution because for every problem there is a solution. So that's where swing trading came in, and now it allows me to not spend time on the charts throughout the day, but basically um, do it throughout the week a few times and just manage those positions. Move to Cali. I mean, that's pretty good indeed. You're done by 9 a.m. and then you can do other things. That's pretty good. That's a good time zone to be in. Yeah. I used to think like a time zone like that would be horrible because you have to wake up early, but honestly, I've started to wake up early for the past 2 weeks at like 5 a.m. And I pretty much I like it. It's been treating me well. You get in early. I can eat my breakfast and then go to the gym at like 7 or 8, and then by 9 a.m. I'm done with the gym and exercise and stuff, and my day is still starting up. So that's pretty good. I really like it. For some people, it might be you live in a time zone where New York AM session is in the middle of the night, so that's gonna be a way different story again. You love waking up at 6 a.m. Yeah, I've been starting to like it too. I used to be like a night person, right? I stayed up at like until 4 a.m. and then I went to sleep at 4, and I just worked until 4 a.m. But I completely switched it around in the past year to first going on uh switching to morning workouts, waking up at like 7, and then being able to go to the gym by like 9 a.m. But recently I was like, you know what? I'm gonna make a switch and try to see if 5, 6 a.m. works out, and it does. So let's see, you trade Asia at 4 p.m. for 2 hours if it's moving, and New York session for 2 hours, maybe if it's showing strength. But it's pretty good timing though, 4 p.m. to trade and then trade again at like 6 a.m. or 6:30. That's nice because then you have like all the time in between to basically go about your day and do everything else. Yeah, that's very balanced. That's nice. Really allows you to also have some free time. Allows you to um, still exercise or whatever someone is into to do other stuff except be glued to the chart. That's good. But yeah, at the end of the day, it's all you need, right? Those few hours when the session is actively or is active, it's all you're gonna need. You don't need to be there for all three sessions usually. I mean, for some, it's something for some people. They like to do it to be there at London, New York AM and PM. But yeah, I don't know. It's not for me, honestly. Yeah, you just hit the kill zones and then you're done. Exactly. It makes sense. All right, let's take a look at. Oh, that's the wrong chat. Let's take a look at what NQ has been doing today. Because we're still kind of stuck in here. So yeah, so we're still stuck inside this box basically, almost breaking out of it. So we had like a pretty bullish day so far. That's good to see. Was anyone able to catch this massive expansion from the open? It's crazy. I'm personally not a fan of these type of days when I used to trade intradays because it would just go off and then it just be gone, and I would basically just be waiting. And honestly, on these type of days, I just close the charts after something like this happens because usually there was like no opportunity for me. So it was pretty good to basically be able to judge it pretty quickly if the session was for me or not. You did Asian session, and it was pretty nice. Let's see what happened during Asia. Oh, it was a pretty nice expansion during Asia. That's nice. This Friday was one of those days again. Yeah, pretty nice reversal though, and then just barely not out, not taking out the highest crazy there. There's also news this year that CME wants to go to 24-hour trading, so I think they're gonna test it out soon. When was it? Um, or they want to do like 24-hour stock market trading. Was oh no, it was Nasdaq, not CME. CME is for futures. My bad. The Nasdaq. Yeah, it's pending regulatory approval. When do you want to do it? 24/5. It was not 24/7. It will be a shit show for stocks. Well, I'm not sure. I don't know. I don't know. It is. It's definitely a different animal. The thing is, what's interesting is, um, let's say there is no market open at 9:30 anymore, right? Because that's when the most volume comes in. Because if we're trading 23 hours a day, there is no 9:30 open, right? But at the same time, institutions are still working the same working hours, right? Because it's just logical to do so physically, right? Um, for traders at institutions to come in at 9 a.m. or whatever time they start, and to leave the desk by 4, for example, right? So you'd say still the most amount of volume is going to be around the same time, just when institutions and banks and all show up at the desk, right? Um, because even those algo traders, they don't run those algorithms like 24 hours a day on futures because or whatever, because they need to be monitored, right? And if there's no one monitoring it, um, they usually just shut it off. Also because the stock market's closed. Um, but then it invites the question: are we gonna see like a whole new layer or ecosphere of traders and institutions that will man the desks at night, right? So you get like night traders at institutions. That's what I'm thinking, right? That's something that's gonna be like a thing, where you have day traders and night traders, literally. Um, but I mean, yeah, we have breaks for a reason, right? Um, might be cool with more opportunities. Yeah, like you, the only way it's gonna bring more opportunities if it's gonna attract more new investors and new liquidity. That's the only way, right? Because otherwise you're just gonna spread out the same amount of volume slash volatility over a bigger period, and I'm not sure if that's like productive or not. Because I don't think it is productive to do something like that. But like who am I to judge? We only were able to find out in one way. All right, let's see if we have a few more questions. Because we did look at all the markets we wanted to look at. Um, if there's a few more questions, just pop them in the chat, and otherwise we'll look to round up the stream, and then we will be back next week again. We have some interesting new developments regarding the streams that we're going to be announcing soon. Some new type of streams gonna come in. So, what's my model in 10 seconds? Oh, I hope I can do it in 10 seconds. Basically, I blend ICT concepts with fundamental analysis to be able to judge whether a market is going to be expanding or not, and then I make sure to just hop on the train and ride that trade in the trend until it's no longer valid from a data perspective. That's what I do. So, let's say a very big thing is do I use standard deviations? I mean, yeah, for technical analysis, I do use them just to basically get a gauge of where the market might go, or I use it to take profits or that kind of stuff. Yeah. Um, but basically, what I do is, let's say there's certain type of narrative surrounding an asset, and I take my position. If that narrative changes, then I will close the trade, or if I hit a certain technical level, such as indeed standard deviations or liquidity pools, then I'll take off the trade. So that's basically what I do, because I do need like the fundamental backdrop to be able to swing trade, because those are the most important things that drive like the higher time frame, right? Yeah, it's pretty standard. Yeah, but I do like to use the or blend the IC concepts with the indicators with it, um, because like that's the thing. I never have to mark up any chart anymore, so it saves so much time. And then it's basically only some research stuff. I'm not using turtle. No, turkey turtle soup with SMT balls. No, no. But it's basically like a framework of like the fractal model to get your entries for me, right? How come that when there's a sweep and CSD happens, the markets can still reverse? Because markets can always do what they want, right? Unfortunately. So the thing with the markets is, there's a certain narrative that you paint first, right? Let's say you expect a market to go higher, and then there's a entry function that you can use, such as a sweep with CSD, to be able to say, okay, that's the type of entry function that I will use to get into the market. Because I have seen over X amount of trades that that is the right entry mechanism for me, for example, right? So um, that's at least that's how I view it, right? You use a entry mechanism or entry technique. You use a way to determine a draw. You use a way to determine your risk profile and all that kind of stuff. It comes together, and that's your model and your edge, right? And then you execute on it regardless of what else happens. And so yeah, it can sometimes happens that that you have a certain bias in mind, and that you have a entry mechanism such as the CISD, and it fails. It can happen. Um, that's unfortunately just odds playing out, and the power of statistics, because at the end of the course of, let's say, 2 weeks or 3 weeks or 5 months, 6 months, you want to be able to say, okay, that sweep and CSD allows me to get a profitable trade and a profitable data set over a course of 6 months or 7 or whatever it is. That's the important thing, and not if it fails one time. All right. I'd say those are the most important points regarding those type of entry techniques. Because it's the same thing with a fractal model, right? We have a whole model lined out with like candle 2 being the CSD, candle 3 expanding, and candle 4 hopefully being a continuation. But at the end of the day, it can always reverse, it can always fail. It's just the fact that we make sure to build a system around it that ensures that over a certain amount of trades we come up profitable. That's the important part. Same here. Also been a big support for me. Not even in the fact of like only spotting the setups, but it just helps with removing a lot of mental load. I never have to basically draw a line again in my life. So it takes away a lot of time, or it saves me a lot of time, let me put it like that. And then the alerts make sure I don't have to be glued to the screen. I can just get an alert for the stuff that I need, right? So that's the good thing about those indicators for real. All right. I think I'm not sure if we have any other questions. Otherwise, we'll round up the stream for today, and then we'll be back next week for sure. Hey, thank you for your time too. Appreciate you, and yeah, really glad and really appreciate everyone interacting with the stream. Really helps a lot, and it's very enjoyable. Um, so yeah, thank you all for being here. I will be back next week, and I will also announce the next part of the trading psychology series soon. So make sure to stay tuned for that. I'm still gonna work out what topic we're gonna do. Um, if you haven't seen the previous ones, let me send you guys a link of the YouTube. Let me see if I can find it really quickly. Appreciate that time. Thank you for the kind words. Yeah, there we go. If you ever want to check out one of the older streams, make sure to do it right there. And if you're interested in trading psychology and want to know my take on how I look at the trading psychology from like a biological perspective, make sure to check out this playlist for sure. And I want to thank you all for being here, and I'll see you guys next week. Have a great morning or evening or night or afternoon, depending on where you are. And I'll see you guys soon. Bye bye.